Welcome to Quick Invest Brief. Thinking about investing your money but feel completely overwhelmed by where to start? You're not alone. The world of investing can seem complex, full of jargon and endless options. But the truth is, building your very first investment portfolio doesn't have to be complicated. In fact, you can start small, smart, and simply. Today, we are going to cut through the noise and give you a straightforward, beginner-friendly guide to building an investment portfolio that truly works for you. Get ready for powerful insights, briefly told. Let's get started. Before we dive into the how, let's quickly remind ourselves why investing is so powerful. Beat inflation. Simply keeping your money in a savings account means its buying power is slowly eroded by inflation. Investing helps your money grow faster than the rising cost of living. Compound interest. This is often called the eighth wonder of the world. When your investments earn returns, and those returns then earn their own returns, your money grows exponentially over time. The earlier you start, the more powerful compounding becomes. Achieve your goals. Whether it's buying a home, funding your retirement, or saving for a child's education, investing is the most effective way to reach your long-term financial goals. Every great portfolio starts with a few key foundations. Define your goals and time horizon. Are you investing for retirement in 30 years or a house deposit in 5? Your goal dictates how much risk you can take and what types of investments are suitable. Generally, the longer your time horizon, the more risk you can afford. Understand your risk tolerance. How comfortable are you with the value of your investments going up and down? A 20% drop might make some investors panic, while others see it as a buying opportunity. Be honest with yourself. Start small and be consistent. You don't need a huge lump sum. Start with what you can afford, even if it's 25 or 50 pounds or dollars a month. Consistency, or dollar cost averaging, by investing regularly, smooths out market fluctuations over time. For beginners, the best way to build a diversified portfolio isn't by picking individual company stocks. Instead, focus on these powerful, low-cost options. Index funds and exchange-traded funds, also known as ETFs. These are your best friends. What they are: instead of buying shares in just one company, an index fund or ETF allows you to invest in hundreds or even thousands of companies at once. For example, an S&P 500 ETF invests in the 500 largest US companies, while a FTSE 100 index fund tracks the top 100 UK companies. You automatically get broad market exposure and diversification. Why they are great for beginners. Diversification. Instantly spread your risk across many companies or even entire markets. Low cost. They are passively managed, meaning they don't have expensive fund managers trying to beat the market, which translates to very low fees for you. Simplicity. You just buy one fund and it does the diversification for you. Look for broad market index funds or ETFs that cover your home market, such as the UK All-Share or the SP 500. For even broader diversification, consider developed market ETFs or all-world ETFs and index funds like the FTSE All-World or MSCI ACWI, which give you exposure to thousands of companies across the globe, including both developed and emerging markets. A word on other investments. Individual stocks are riskier. Bonds. These are loans to governments or companies. They are generally less volatile than stocks and provide more stable income, but typically offer lower returns. As a beginner, you might use bond ETFs for diversification as you get closer to your financial goal or if you have a lower risk tolerance. Now, how do you combine these? Asset allocation. This is deciding what percentage of your portfolio goes into stocks or stock funds versus bonds or bond funds. A common rule of thumb is to subtract your age from 110 or 120, and that's the percentage you put into stocks. For example, if you're 30, you might aim for 80 to 90% stocks and 10 to 20% bonds. As you get older and closer to your goal, you'll generally shift more towards bonds for stability, choosing an investment platform, also known as a brokerage. This is where you will open your account and buy your investments. Look for platforms with low fees, especially for trading or annual maintenance, a user-friendly interface, and access to the index funds and ETFs you want. Many popular platforms today offer commission-free trading on stocks and ETFs. For example, in the UK, platforms like Trading 212 and Invest Engine are known for their fee-free investing options for self-managed portfolios. In the US, you will find similar offerings from brokers like Fidelity, Charles Schwab, and Robinhood. As a disclosure, if you are considering Invest Engine, you can find a link below this video. If you choose to open an account through that link, it won't cost you anything extra, but I may receive a small commission, which helps support this channel. Always do your own research to find the platform that best suits your individual needs. For UK investors, look for platforms that offer stocks and shares ISAs, which are individual savings accounts or self-invested personal pensions, also known as SIPs for tax-efficient investing. For US investors, look for platforms offering Roth IRAs, traditional IRAs, or 401ks if offered by your employer for tax advantages, or a standard brokerage account. Finally, to make your portfolio thrive, automate your investments. Be patient and think long-term. The market will have ups and downs. Don't panic and sell during a downturn. Investing is a marathon, not a sprint. Regularly review and rebalance. Once a year, check your portfolio. If your stock portion has grown significantly and now represents too large a percentage, sell some stocks and buy more bonds to get back to your target allocation. This helps manage risk. Building your first investment portfolio doesn't require a finance degree or a huge sum of money. It requires clear goals, consistent action, and a focus on simple, diversified, low-cost investments like index funds and ETFs. The hardest part is often just getting started, but by taking that first step today, you are setting yourself up for incredible financial growth and security for tomorrow. What's holding you back from starting your investment journey? Or what was your first investment? Share your thoughts in the comments below. If you found this brief helpful, please hit that like button and share it with someone who needs to start investing. And for more powerful insights, briefly told, subscribe to Quick Invest Brief now.